Hmm. All right, I guess we'll just see how it goes. Very excited for everyone to be here. It is 12 o'clock right now, and we are going to go through the market trends through the Sacramento area. Excuse me if I've had kind of a cough and a cold for the last couple of weeks, and I'm just getting over it. First of all, this is a conference call. I've muted everyone, and what we'll do is we'll unmute whoever is interested at the end. Please hold your questions until the end. If you do have not quite sure how to deal with questions closer towards the beginning. I do have a lot of information to cover. I'll try and cover it as succinctly and effectively as possible. And I'm really excited about this material because I do a lot of research, as you know, on the marketplace. And my goal with this presentation is to show what happened up through 2017 and where we're headed going into 2018 for some of the numbers that we have already for 2018, and giving a reference for the macro market and how that is affecting us as well. So I'm really excited for this. And here we go. Once again, please keep your microphone's video turned off. I do have it so that you can turn it on if there's an emergency or something, but I don't expect there to be. A little bit about myself. I got into residential real estate sales in 2000. I knew that when I got into residential real estate that I wanted to be a broker, and I knew I wanted to work with professionals, and I knew I wanted to work in the investment side of residential real estate. So I've been a broker since 2003. You had to have your license for at least 2 years, so I got it 3 years afterwards. I started my own company in 2004. I'm very passionate about the markets. I started tracking markets in 2005 when I was introduced to an agent who worked with me, and we started doing a lot of research and following the numbers, etc., in Excel. And in 2010, through the dip in the marketplace, when it was at its bottom, I started writing the Right Report, which was a macro report on the market, on the macro market. Now that's changed somewhat. I used to have the US and California and the local markets here in that report. And if you look at my website on the reports page, you'll see that the Right Report has changed, so it's just the national market, and I've broken out the California market and the local market, Sacramento market, into different reports. Also, I am a Sacramento native, and I've worked here full-time in residential sales in Sacramento. So that's kind of what I bring to this conference call, is having lived in the market as a professional and worked in the market. So a little bit different opinion from those who look at it from the outside. I want to go through the agenda of what we're talking about today, starting with the data set and the 5-year graph. That's a little bit of explanation about the market information that we're going to be using today. The residential sales trends will be next, and that is a lot about what's sold, how much is sold, prices, etc. Supply and demand, that's a little bit different from what most people address. Supply is the number of homes that are available for sale. The demand is the number of homes that are pending. And what it is it's the number of buyers that are looking in the marketplace and willing to pull the trigger on a property. Next is buyer motivation, which you can see here. Buyer motivation is not the number of buyers, that the demand is the number of buyers. Buyer motivation is how motivated are the buyers that are in the marketplace. And I found that that's another important element to this. And we'll go to the macro influences, that are the influences outside of Sacramento. We'll talk a little bit about interest rates and the Bay Area market and unemployment and a couple of other things there. Finally, we'll jump into the projections for 2018. My goal, it's about 12:05 right now. My goal is to be done with the numbers, or if we're through the numbers by about 12:20, so that we can do any questions that anybody may have at the end regarding all of this. The data set. First of all, we're talking about Sacramento County. Placer County, Yolo County, El Dorado County are not included, and we're only talking residential single-family units. We're not addressing condo or 2 or more units. Generally speaking, that is the majority of sales and buyers and sellers within the marketplace. It's probably about 85%, 80 to 85% of everything, and the rest, the 20%, would be condos and 2 or more units. And we're only talking about residential, not talking about commercial today. And I wanted to cover very briefly what the average and the median is. The average is the sum of all the numbers divided by the numbers. So if there's 1,000 homes that sell, the average would be the average price for all of those 1,000 units. Now the median is a little bit different. If homes are selling between $100,000 and $1 million, the average could be 500,000. But the median is the number where there's the same number below that number and above that number. So the median could be 250,000, which would mean that there's 250 of the 1,000 homes that sell, 500 sell below the 250,000 price, and 500 sell above that 250,000 price. And that's important to keep relative and keep in mind as we're moving through these numbers. Next is the 5-year trend graph. This graph is something that I put together after many years of research, and the intention of the graph is to explain where the market is currently in comparison to the 5 years prior to this. So the 5 years that we're using here are 2012 to 2016. What we did is we take January for 2012, 13, 14, 15, and 16, and we averaged all those numbers together. And what we came up with, the average for January, the average for February, the average for March, etc., is this blue line here in the middle. Now, of those 5 years, the number that is the highest for that January, for those 5 years, the highest January is the one that's recorded right here. The highest February is recorded right here. The highest July is recorded right here. So this is not any particular year. This is the highest point in that 5 years, and this is the lowest point in those 5 years. So what it does, it gives us a trend as the market moves up and down through the different years. It gives us what the average is. And I use 2012 to 2016 because that is when the market turned and was at its bottom in January 2012. So this is through the increase over the last 5 years. This is the high point at that month through the last 5 years, the low point, and finally the red line is 2017. So what we can do is we can compare the last year, 2017, compared to the trend, the high, low, and average trend for the previous 5 years. Moving forward, we're going to go into the residential sales numbers. This is the Sacramento price since January 2000. It peaked at 394,450 in August of 2005. The low point was in January of 2012. And where we're at right now is 349,900. And it's been that way for the last couple of months. That's, once again, the median price trend. It, from the low to the high where we are right now, it's gone up 117%. And the difference between where we were at the previous high to now is 11.3%. Basically, the market is already close to where we were previously, so there's not really, it's not really low, so there's not a lot of demand pushing it up, and it's not really high comparatively, and we'll talk about that more, so it's not really dragging on the market either. Sacramento sold price, this is just the last couple of years. This is the average price here. This is the median price here. And you can see how they pretty much chart together. One interesting point is that the average price came down a little bit for December, while the median price stayed the same. And once again, this is just going sideways. It's not really pushing demand up or down. The number sold, you can see the average price for the different months through the year. There in the blue line, and the red line that is 2017, kind of below it to start the year, above it in the middle of the year, through to the end of the year, and right about average. Once again, going sideways. Months of inventory. Here's where it's a little bit different. Months of inventory, number of home actively on the market. You can see the average for the 5 years there in blue, and we were, for the most part, up until July, very close to the low inventory. Now, the low inventory, interestingly, for the Sacramento market of those 5 years was predominantly in 2013. We were close to that 2013 low all the way up through July, and then we started approaching the average again, getting close to the average in November, and then dropping off a little bit from the 5-year average in December. This is going to help to push the market up when the inventory is low. And generally, when we're talking about the arrows, the green and the red arrows, we're talking about price. When the price turns and it starts to go down, it's because there's more seller demand and there's less buyer demand in the marketplace, and it means a shift. And that's what we're looking at as a crux through this, is with regard to the price, median price, and average price of homes through the marketplace. Days on the market. What we're seeing is the average days on the market and the median days on the market. What you see generally for 2017 is that it's a little bit lower than in 2016. We'll have another graph on the days on the market. Generally, this is pushing demand and pushing prices up. This is showing that there's a fair amount of demand with this low, with the median days on market being below 10 days on the market up through July and into August, and then not even reaching 20 days on the market. So more than half of the buyers are buying or getting into escrow on their home in less than 3 weeks, is what this says. Next is supply and demand trends. Supply is normal. That is at the end of the year, in the fall of 2017. The urgency for sellers is normal, and that'll be for another report. The buyer demand is very low, and we're going to show that in a minute, but the motivation is very high. That is, the buyers that are out there are very motivated to purchase. So seller supply, very low at the beginning of the year and through the first half of the year, and we just showed the graph on this, and you can see it went up to the average in the last quarter. Buyer demand, however, has been low throughout the year. So the active inventory, once again, low to very low and up to the average through the end of the year. This is the active inventory and active number of homes on the market. What we're seeing with the pending inventory is that it is lower than any point in the last 5 years. So this is the average. This is the low point of any month through the last 5 years, as explained. And in 2017, we're below that point through the whole year. So our number of buyers that were in the marketplace looking for homes has been historically, compared to this whole recovery, quite low. And that is a drag on the marketplace. If there's fewer buyers, then it's more likely that the market is going to shift. What is countering this, however, is that the total inventory overall is still quite low. So the amount of inventory of sellers is low and went up to normal, and the amount of inventory of buyers actually buying properties is also low. But overall, it's kind of averaging out and still being lower than the inventory of any point over the last 5 years. And you can see the two graphs here. This is the active inventory. And this is the pending inventory here. Let's move on to buyer motivation. You can see from the average days on market, 2017 was, for the most part, it started out closer to the average, and then it's moved a little bit lower, and it's been lower than the average at any point in the last 5 years, which that is buyer demand or buyer motivation. This is the other slide that I found was very interesting when I discovered it a couple of months ago. Excuse me. The percentage of the inventory, the pending inventory that is selling, is much higher than at any point in the last 5 years, just over 70% at the end of the year. And it was pretty close to 70% from March all the way through the year. You can see in previous years that the average was just over between 50 and 60%, and closing the year at 60%. So that is the number of, or the percentage of pending sales. So even though there's fewer pending sales, many more of them are closing. That is, the buyers are much more motivated to close the deals. I think part of that is likely because of interest rates, because of the scare a year ago, December, when the interest rates went up about a half point, and it got the buyers really motivated to perform. Next is some of the macro influences. You can see here Sacramento as compared to the state of California. One of the things we see is a strong upward trend over the last 5 years or so in the state of California. Here we shot off at the bottom, and then we haven't seen quite the upward trend. I mean, it's definitely an upward trend, but it's not as strong as the California market is as a whole. The California median price has grown 9% November over November, and the median price for Sacramento has grown 11% December over December. Interest rates are still really low. The average from 2012 through 2017 is under 4%, which is historically low. The average since 1972, 8.16%. So this line right here is more or less the average historically. And you can see how low we are. We're almost half of that, or we're actually less than half of that. The rate in December is 3.95. Now, what is likely to happen, this is also going to be a drag later on, because it's expected that interest rates are going to be rising over the next couple of years. I am surprised that it's taken this long for the small jumps that we've had a larger jump in June of 2013, another jump last year in December of about a half point, but it's still maintaining itself very low. And expected to go up to 5 and 6% over the next couple of years, but I've been expecting that for a couple of years. Affordability, that is the people's ability to be able to buy the median priced home in Sacramento with a 20% down payment. Affordability is still very high. California Association of Realtors does a great job tracking this, and I only have their numbers up through the second quarter of last year, but it was 45%, where California is 29%, just below 30%. So we're still quite affordable compared to the rest of California, and especially compared to the Bay Area. Now, Sacramento's, this is unemployment rate. And when unemployment is low, it means that people have jobs. It means people feel generally financially secure, and they're willing to purchase properties. What we see is very low unemployment rates throughout the nation, as well as California, 4.6% in California, and 3.7% as of November in Sacramento. So lower than both California and the United States. This is also going to push up demand for properties and prices in properties. This is an interesting graph. As you can see here, this is where we're at, 349,900 median price in Sacramento. This is California and San Francisco, San Mateo, and Santa Clara. So this is Silicon Valley area, and how much that has gone up over the previous high. What typically happens, and what's been very interesting, that we haven't seen as much of it as we did back in '04 to '06. Saw a lot of Bay Area folks even beginning to commute into the Sacramento area from the Bay Area. We are seeing that beginning again now. And so it'll be very interesting to see. I expect that to continue. And my observations in the Bay Area is that it hasn't really slowed down. So it will be interesting to see how that pans out over the next couple of years. Finally, projections into 2018, what to look for when the market turns. First of all, sales, number of sales will decrease. The inventory, the number of homes for sale, will increase. Months of inventory will increase as a result, because that's the relationship between those sales and the amount of inventory. The days on market will be higher because there will be more inventory, and the number of distressed sales will increase. That is the number of REOs and short sales. REOs being real estate owned, which is bank owned properties. Right now we're at about 2% of bank owned properties. About 2% of what sells in the marketplace is bank owned. So going here, this is the same chart for 2017, but you can see that in 2018 in January, the number of active properties at the beginning of the year, very close to where we were at the start of the year, which is very close to historical lows. The average being right up here, high being up here, low being down here. So close to the lows for the previous 5 years. This is going to push up the market as there's low inventory. The buyers are going to have less to choose from. There's going to be more demand for the good products that are out there, and people are willing to pay a little bit extra, a couple $1,000s extra, which will move the prices up. Pending inventory, same thing. It's lower than expected, and that's going to be a drag on the marketplace. And we'll have to see how the buyer motivation pans out here in the beginning of the year. But you can see it's a little bit lower than at any point in the previous year, starting out January of this year. Total inventory, once again, quite low. We're close to where we started at the beginning of the year, lower than the previous 5 years, 2016 to 2012, 2016 average. And that's going to tend to push the market up. Months of inventory, we're back down to 1 month of inventory, which, as you can see, is below the average for at any point, close to the lows. And so that's going to be a push and drive to the market as well. So what we're seeing here is low inventory with very motivated buyers. This is going into the year. Homes are still selling very quickly. There's low interest rates. The area is very affordable still, and low unemployment. Now it's time for questions. So is there anybody? I believe you can raise your hand and I can unmute you. Or you can type it into the chat, and I'll happy to answer any questions that may be out there. So are there any questions out there? How will the new tax laws affect our marketplace? That is a really great question. And ironically, it's the question that my wife posed to me about an hour ago. What I think is going to happen with the new tax laws and how it's going to affect the market is that initially it's going to be a benefit to the marketplace as people have, well, generally people are positive when the taxes go lower because they end up with a windfall of capital. So that improves their optimism within the marketplace, which I think will help to drive up the marketplace as a whole. And that's likely to last for as long as the tax effects are felt by the populace. Now, the downside of the taxes are not so much the taxes themselves, but the debt and potential debt resolutions for the US debt is what's going to happen over the next 10 years with the debt and the economy, and how is that going to play out when the market turns. So that'll be an interesting thing to watch over the next few years, but I think the new tax laws are definitely going to be a benefit to not only residential real estate in Sacramento, but throughout the United States. Right, why don't I unmute everyone at this time and let's see if anybody has some questions. Okay, everyone's anything this time. Any other questions? Well, thank you so much for joining me today. And I really appreciate it. If there is anything I can do for you, shoot me over an email or give me a call, and I'm happy to answer any of the questions at future time if this isn't the forum for you. All right, I'm going to sign off now.
Thank you.
Thank you so much.